Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com. On Thursday, October 18th, and the S&P basically pushed up against the ceiling that we see here. And, we saw a little bit of selling pressure. Wouldn't put too much emphasis into it. I don't think too much has changed in the S&P. One thing I want to note out is the point of control for the month of October did move from this 1436 level up to 1449, call it. So we want to see that level hold. If it does, then that should bode well for stocks. It could be, for example, if we trade here for a couple of days, hold it, and then we start to see buying pressure, it could result to the next leg higher into the market, into the election. So we'll just have to wait and see. But it looks like overall the market's still fairly strong, and I think that you want to stick to the long side here, especially as long as we stay above last month's point of control, which is around 1433. So you have a little bit of downside risk, but overall things look pretty good. The Nasdaq, on the other hand, rolled over due to Google and Apple today. If you look at the hourly chart on the Nasdaq, what you can see here is the 90-day point of control right at this 2772 level. The 20-day moving average provided for pretty good resistance, and you can see the selling bars came in and obviously took a beating on the Nasdaq. Also to note is IBM in that picture. So I guess let's just show Apple. Now yesterday, if you recall, if you do follow me, I sold Apple, bought it, had a cost basis around 634, which you can see with the blue line here. I took profits 647.55 yesterday, and that ended up, now that we see in hindsight, a good level to take profits. Why did I take profits? Well, coming up to the 50-day moving average, 20-day moving average, basically where it failed a couple of weeks ago, you expect support becomes resistance, right? So support, bam, nice bounce off the 50, a breakdown should become resistance now, right? So we took the bounce, got long. I don't know exactly what price. I was long from under 630, and then I just added to the position. I think it was on the first hour on Tuesday or something. And once it broke down in this bar, the first bar on Wednesday, I said, you know what, it's not worth it, because at the end of the day, the Nasdaq is the weakest of the group, and I don't want to be holding something that has the likelihood of rolling over, a downtrend, that sort of thing. So I ditched Apple, which ended up being a good trade. Now Google, what you can see here is how powerful volume profile can be. The point of control for 2 consecutive months, up at 753. All I have to say is, look at what level we sold off from today. That's pretty self-explanatory, right? You had market going over, 753's resistance, again, lower low here, test back of 753, and then obviously you had this huge spike down on huge volume, just to point it out, and the fact that that's there. Also, here's something that's interesting. Point of control for the month of August. Where does price stop? That's pretty interesting, right? So this just shows you how powerful volume profile can be. Price is truth and volume is truth, and here we are showing you. Caterpillar now took profits on this trade today. This was actually a pretty good trade. 83.45 was where I bought, and I know there was time to get in on that trade. Took profits at 87.45 today. Had a limit to sell up there. 8 cents off the high today. A little bit of luck, sure. But it was a good trade. This point of control, the 50-day was, my reference point to get out of the trade. Sure enough, ended up being a good level. About 4% gains on that. Actually, I think it was a little more. 5 to 6% gains on that trade. So not bad at all. Bristol Myers, no change to this trade, 34 by 32 credit spreads. Just want to point out that earnings the 24th before the market. So we do have until next Tuesday to make a decision on these. Do we get out of them or do we let it ride? Just kind of going to wait and see. I really have no position. Now, if the spread offers more than 50% profit, I'm probably going to take it off just to manage risk. Okay, I have a few trading ideas, a couple that I'm really kicking myself over because I was either in the trade or looking at the trade and I got out, and that's just really frustrating. So the first one is Dow Chemical, and this trade I was looking at it on looks like the 15th. What was the 15th? Monday. And it was just giving you a little bounce, nothing major at all, just back to where we've bounced in the past, and I see the lower lows here as I've marked off, but I could also see, the argument for a bullish wedge pattern. And if you ignore this little blip on the screen, let me zoom in. How about I start over, right? If you see, all right, let's just connect the highs, and it's going to be an ish, right? Connect the highs. Bam. 2 days above these levels, but the second day it closed below, so we won't put too much emphasis in this. Now let's connect the lows. This is where you're coming to an apex. I was looking at Dow Chemical down at these levels. The only thing that kept me away was volume wasn't good enough. It didn't qualify for me. Sure enough, 3 days later, Dow Chemical moves right up to the 1 year point of control. Just keep an eye on this. I think this is something that you can look to be long. Earnings are coming up, so maybe not rush into this. But if you want to just buy a little to be involved, I don't think that's a bad idea. And, just get involved, have a placeholder position. If you get a dip below 29 and you start to see buyers come back in, then you look to pick it up, especially if it goes against let's call it $29. But right now you're right at last month's point of control. If that level, if we break above that level, you have an argument that price is going to go higher. You have the 50-day, 20-day, and the average true range stop all below you. So you have a reference for your stops, and you just have to wait and see. But I am kind of kicking myself that I didn't catch this trade. But you know what? Can't catch them all. IBM, right at the 1 year point of control. Earnings are already out, so that's good. I'm sure this is good enough for a bounce. So what I would say is you keep your stop about under 193, so about 1% risk. And as far as reward, let's go to the monthlies. Reward could be around $200, so about a 2-to-1 risk-reward ratio. Not too bad. And you're just looking for a bounce, or maybe you're just looking to get involved. That's fine too. These aren't bad levels to do so. Coke, 200 days creeping up. Just keep an eye on it. We continue to hold these levels, held them today. And let's see. We're just back at these levels. Huge volume today. I just want to point that out. So if this is something that interests you, keep it on your radar. Maybe buy a little bit and go from there. Of course, I got out of Coke the other day, though. Southern, another one that I'm kicking myself over because I got out the other day, and what happens? You have a 2-day breakout here. So very frustrating. The 1 year point of control is your reference point. If you want to scale in a little bit to the long side, I don't see why not. I would keep your stop below 46. That's not even 2% risk. And sure, is it a slow mover? Yes, it is a slow mover, but this is something that's yielding a little more than 4% right now, and you have an easy 2% target to the upside, 2% to 4%. I don't think that is that bad of a trade for a slow mover. And then, of course, if you want to hold for the longer term, I'm sure you have a 10 to 15% annualized return. And that's not too bad if you're just looking to sit on something. So just keep that in mind. So overall, I think that you do want to stay a buyer of the market. I think you want to stay away, for the most part, from technology. I think IBM setting up for an opportunity for a bounce back up towards 200. Maybe you want to buy the 195 by 200 call spread. Something like that. I don't think that's a bad idea. Or maybe sell the the 190 by 185 credit put spread if you're an options trader. With this, two big down days, it could provide the necessary premium. You could also sell the 195 by 190s. Just giving you some ideas. Whatever fits your risk parameters. That's up to you, and the decision is yours. I'm just looking at the charts and saying, looks pretty good for a bounce, and not going much further than there. But, at the end of the day, if it drops, say into this yellow box, you probably don't want to be long. You want to wait, let it work its way out. But I'm not afraid to buy the dip here just because you have the point of control for the year at these levels. Usually good for a bounce. Just to show you the euro point of control for the year, watch for this to roll over. If this has more downside pressure, then I'm going to reverse my opinion about the market and say you probably want to scale down from the long side, which is actually my position right now. Because I took profits on Apple and Caterpillar, I'm holding a decent amount of cash relative to what I was just earlier today or yesterday, so just keep that in mind. The dollar bouncing at the bottom end of this range, so keep that in mind also. Just don't get greedy. Realize that the market's going to give you some opportunities, both to the long side and short side. I think that you can watch this 149 level, 148 or so on the S&P futures. If we start to dip below those, just be cautious and realize that we could dip another 10, 15 points and nothing would necessarily be wrong with the market. At the end of the day, we're just in a sideways consolidation range at the top of the range, so we could be due for some type of pullback based off of what happened in the past. What has happened in the past? It's been right to be a seller up at these levels. It's been right to be a buyer down at these levels. Where are we at? We're at the top of the zone, at the top of the range. Point of control for this current month, I would be putting some emphasis on it. So anyways, I hope this helps. If you took the Caterpillar trade, obviously it was a good one. Got out 8 cents from the highs right now. I have a very small position in it still, just to stay involved, just in case it does keep going. I can always add to my position, which makes it pretty easy. But if it doesn't, then it was a good exit at the top, and maybe we'd look to reload back more towards the bottom of the range. So anyways, have a great night, and I'll talk to you this weekend.